Great and beautiful morning and evening to you or wherever you are joining me at this hour. Welcome to 584 edition of Invest Digital Trading Academy Live with Ambrose. I would say that the global market has really moved, in a strong direction this morning, and I want to target, a green Friday across the globe. I will tell you that, despite that in Asia market, we are seeing a skeptical, trading that's in that volume because of the prolonged New Year holiday in that region, especially in China and all that. But seeing that market is, on the last trading day of the week, is picking up sharply in Europe and also in US. And also in Africa, Africa is not left behind. Africa and bubbling in green. NGX is extending, is rally, breaking new resistance level or new security level or line, let me put it that way, in the market. But even technically, there's some sign of a warning, but I'll tell you, we'll discuss detail that those warning at this point, is it what you should stick to, or you just, I will play around it because I'll tell you that at the market at this level in the NGS, we need a what? We need two legs to watch this market very carefully and profit from the rally and also protect our capital and also protect what our profit. That means as you are watching the market now rallying in NGS, you need to also be conscious of yes, no market remain up and no market remember. If you have that at the back of your mind, it always guide you on what to do at the right time in any market situation. Because in this market cycle, they come with different phases and different opportunity. As you are seeing the bull running, every analyst on the street can be right. At this time, don't say when people are fearful, when people are greedy, what do? You should know all this as a trader or investor in the market. But let's start with what's happening in Asia market right now. Yes, like I said earlier, most of these Asia market are still on the longer holiday as we speak. But nevertheless, we are seeing that trading has been also a bit scanty. We are seeing volume, in that region because of what? Because of this, prolonged holiday I've mentioned earlier. But also, we are seeing that, attention is also trying to or looking forward to this U.S. and Iran, negotiation on this next drop or shoe. What would you say? Are we going to see, a kind of another uprising, or want to see peace reigning? These are the things that these two nations are still negotiating in U.S. and Iran, accusing each other of militarizing ambition and all those stuff. Iraq insisting that it was for peaceful and all those for it goes peaceful. Well, let's see what like, all this is going. As the talks also going in January. Let's see how all this is going to play at the end of the day. But I'll tell you that market in that region is very very we're seeing team activities there because of this prolonged holiday. But investors also are taking advantage of. Yes, we're seeing oil price still oscillating. Let's see how whether this oil price we're seeing will continue. Oil price has also hit another across the $70, which also a plus for oil producing nation, like I said earlier, but we'll see whether it will sustain. So that closing yesterday around it closed there around the 70.60 dollar per barrel. That close of trade on Thursday. So let's see what will happen as market is ongoing right now, in the world. So let's quickly look at what is happening in Europe. Like I said, that nearly all the markets are in green, and Europe is not left behind. Sharp number, Europe have suspended that generally since the beginning of this week, which is also a good news. This holiday started first, on Monday was the US and China because of that, or Asia. But Europe market has been going on, and I tell you, activities has also been looking up as investors continue to digest what corporate numbers that are hitting, and also seeing that the US retail sales report show that yes, there's increased buying interest, the jump up from the report that yes, which is also a good news for that euro for me. Today, with last trade of the week, as investors continue to digest these numbers, we're going to see more also economic data also guiding what the next will be. But I'll tell you that in all this, all eyes are still on the tension between US and Iraq and Iran, as I mentioned earlier. But looking at the market indices in this zone, we're seeing that in Germany, like yesterday on Wednesday when we were discussing, we saw that the DAS or index is still up in the green, which is a good news, and that of CAC 40 in France is also up by 0.5, and that of UK index, which is the FTSE 100, is also up by 0.4. You can see that we're still market moving up in the green. Can see that the figure I'm talking about is higher than what we saw on Wednesday midweek, and in this class that trend continued on Thursday. Today we're seeing it is today that the earnings that are coming, that is the price feed on any market, and other improvement economic data show that yes, that zone is recovering and that zone is also marching forward. You can see that the price is also reflecting in what the earnings are doing. Yes, also we expect to see more corporate earnings coming, ahead of the week, the new week. But I tell you, for this week, we're seeing numbers also. It's a busy week for earnings in that market, but also it's also extending to next week. Today is the last trade of it. For me, investors are also taking time to digest. That's why I tell you, most time we see as numbers are coming, different reaction is from different class of investors. But as we speak now, I say that people are kind of digesting, interpreting these numbers, analyzing it, and that's why you can see that the market has kept on looking up. These are the things. Also, both tech companies, some are recording loss, some are recording positive number. So even from the food, French food group was saying that numbers are also coming. This number also boosting confidence and focus also guiding what it would look like. These are why focus is always good for any company to give an insight what is expected from that company. As investors analyzing the number, economic data are also coming, also pointing out that a turnaround in some of the economy or some of the country within that eurozone. As we speak, there's a turning to Friday economic data that came from UK that reviewed that UK retail sales surged in January. That's a good one, and for me, compared to the previous month, it's also a sign that yes, investors are really increasing their consumption, and it's also a good retail degree of confidence in the economy for the new year. This is the second month. For me, it's also a good one for UK, and also in that England or that zone. For me, it's a good one also. We're seeing a better figure, moving to around almost 1.8% last month, as compared to what December was seeing a 0.4. You can see that you can see that growth consistently in there, according to the report from their national statistics office. For me, it's a good one for Europe. And also, I tell you, crude oil price also is also heading for a very strong gain for this week. Like I said earlier, that was selling crossing $70. As we speak right away now, it's trading flat at what? At $71.66 per barrel. Right now in international market, which is also good for Nigeria. Don't forget that our benchmark is around 64. Already we are not really seeing surplus. Which also be a plus for us, in our reserve for this 2026 budget. Let's see how this is going to also support Nigerian economy. But I believe that these are good news coming from the global economy. Frankly, let's look at what is happening in US. US market is not leveling, like I said earlier, adding through. This market is also looking up. We're seeing private credit, here and there. US also, the GDP, all eyes on these figures to see how these numbers want to also change. US consumer numbers, all this also, I think, are going to shake the market. But as we speak now, I'll say that the US market is in green, looking up as the crucial inflation and growth data are set to be released. Also, concerns are also over the health of the private credit sector following the announcement from the industry titan that Blue Oil Capital. Let's see why the oil price have stabilized. We're seeing oil price above even what this tension continuing between, like I said earlier, US and Iran. But good thing that US major indices are in green now. But as we speak now, being the last trading day of the week, I think that Dow Jones is up by 554 basic points, which is about 0.1 up. Also saying that S&P also is up by 0.2 and Nasdaq is up by 0.2. All these index remain in green, even when it is oscillating as one tension or the other, oscillating because of investors trying to digest at corporate. I will tell you that corporate earnings that investors are digesting, also kind of analyzing also what is also supporting this this rebound was seen or kind of recovery. But I'll tell you that all eyes still on what or Walmart results as investors say, let's see how this big boss, this big boss retail companies want to come with their numbers, and also the merchant also how inflation has shaped accelerated before now, how the tariff US tariff thing also all this unveiling. Let's see how the year 2026 look like as the actual coming from this company saying that yes, I think that share price might likely go down, but let's look lower. But let's see at the end of the day. But numbers are coming to carry the works. Also, tech giant Apple sleep well, also dragging down the index of S&P. But let's see also that the reserve, why the Federal Reserve Governor, Stephen Mera also died between diagonal between them is what long-term standing dovish view on inflation, which is also on risk interest rate, sorry, which is also good. Let's see how this will continue. Are there to be rate cut? We're going to see also hiking. These are the things we want to do. Let's see this comment from him also that the January meeting shows that have serious participants want also the possible rate hike or rate cut ahead. These are the things that should also guide us. Let's wait and see, as the year unfolds. These are the things that will work. Stability or kind of oil, being steady or kind of being stable all this while is also a good one. We don't know whether it has been long. We're seeing oil crossing at $70 since President Trump came to office or resumed almost getting more than a year now. But let's see how far we go to see oil price if this tension continue, how it will to also affect. But I'll tell you this morning, as far as remain also to see the core PCE index that look at inflation, what it is that's at December or month to month, and also compared to November. Let's see, the projection economics growth economics analysis is looking at on the inflation to see the consuming power and also how this confidence also support US economy. Also, all others are also US GDP to come. These are also these GDP comments also give insight to see if the economy is stabilizing or at least to see a slow down in the economy. Because if you look at what happened between October and December period, this is also going to be reviewed in the report as well. Going to see the last quarter GDP report for 2020. But let's see and see how this is going to play out. These data are what is going to also guide not only in US, other countries like here in Nigeria also expecting to see our GDP for the last quarter, how it's going to play out. These are the things that also investors should keep their eyes as to speak now. Like I said, down to NGX. NGX, tell you at this hour, is on fire as we speak. We're seeing the index crossing the mark or statutory line of 194,000 mark or statutory line crossing to read right now to speak now. We're seeing 194,071.05. You can see how sustained after market have break today from 193,072.69 toward 194,108.60. This is the rate this morning. Market has even got as high, gaining almost 0.52% today. But as we speak now, market is still at that point 0.5. That thought as high as 108. Now it's at the market is reading 194,071.0. This is the state for the market. Also looking at the market bread or market internals as we call it, but see that the market is having a positive market, strong one. We're seeing 40 advances against a 20 decliner at this hour, and the market is heading toward to the 200,000 mark as we speak now from all we're seeing. And if at this stage that we're seeing that the companies on the exchange due to revaluation, we're seeing that the PE ratio for the market still remain at below 12 as we speak now, at about 10.12, 10.28. Which is also show that even lower than what we saw in 2004. For me, it's a good one that the company's performance as part of what has drive price to this level or bring price to this level. But we're seeing that our market P ratio is still relatively low, below 12 times, which was the 12S. But as we speak now, is a good one. But good thing is that even when the expectation of the expected Dangote listing of refinery and the fertilizer, the coming of NNPC, we're seeing that index is approaching 2,000 mark, 200,000 mark. It's a point that we have crossed almost 100 kilo for a long time. As we speak now, market is heading to almost 135 or 38 trillion naira. For me, like I was saying that we have kind of overtake the South African market. Now our market is leading, but we want our economy to lead. It's good that our market is leading in Africa, but let our economy also lead. Even with our rebasing, we want the economy to also move ahead of other economy in terms of our expansion. That's why I believe that once we cross 5 percent GDP growth, yes, that will consider we are growing. As we speak now, we are still recovering. Good news that that the capital market is driving force, pointing that yes, companies on the exchange are doing great. For me, it's a good one. It's also a welcome development for the market. Let's keep our finger crossed and also pay attention to what is happening in the market. It's very, very important at this moment. Yes, like our topic today, we're looking at NGS at a new all-time high. what is your take on this? The market is strong at this level, reading all this high, breaking out different level, and also some expectation that yes, we're seeing technical warnings here and there. If those warnings are these things that we should hold at this point, yes, I'll tell you that when the market is in a new all-time high, technically there are some signs that we see, but you pay attention to what is driving this momentum. Are these still there? Are they still intact, or they are disintegrating? Anywhere in the world, 80% of what drives market is what liquidity, and that liquidity is still here in the market. Suppose target PFA tsunami, fine, liquidity tsunami, which also, for me, it's not a bad one, but it tells you that there's something driving the market. At this point, like, we're looking at NGX at a new all-time high with what technical warning signal. What next for market players? I'll tell you this. I said earlier that we're going to use what dual lens approach to look at the market. For those that are market player, those that are long-term investors, those that are also short-term. That's why I said what to use two lens, dual lens also to call it two lens approach to look at the market right now, so that we can get the real what we want at the end of the day. Yes, we assume that month of February has gone well. You can see that February don't have almost surpassed what the market has gained from January. For me, you can see that even we are still in 2 months, we're almost approaching half of what the market gained in the whole 2025. Tells you the kind of expectation, the kind of liquidity that is driving the market. But you must not look away that market can turn at any time, and that's why you must pay attention to this signs that the technicals are giving. Technicals are giving a warning sign. Does not mean that when it's a warning sign, it shows that you should run for the market. It should tell you that suggesting that caution is required, and strategic positioning is key, is paramount at this time. It means you should panic out of the market, but suggesting that strategic positioning in the market. And that's why I said that phenomenon means that you must look at for those that are going for long-term investment, because that is why they will way forward. For those that are going for long-term investment, I mean, we must look at what economic fundamentals, which also were seen part of what is driving the market. Those fundamentals suggest that yes, the outlook remains very bright, but I'll tell you, cautiously optimize the outlook. Let's cautiously look at this outlook. It's very, very important to us that we must pay attention to it, because continuity is very, very key. And also, we have seen some stronger macroeconomic data supporting the market till now. We need to understand where we are going from here. It's a good one for everyone that's in the market to play in the market right now, but will not be carried away by off market. That's why we must also apply some strategies when we are trading this market right now, so that we can stay ahead of the market. Yes, we are seeing some flashes of technical warning signals in the market, but like I said earlier, that not suggest I should run forward. It suggests what caution and strategic positioning, which I say is paramount, is key to every investor. You must know if you are a long-term investor, what will you focus? If you're a short-term investor, what will you focus? For those that are long-term investors, what you should focus in this market right now is very, very important. The prime focus will look at long-term valuation, fundamentals, and macroeconomic trend. Macroeconomic or macroeconomic trend is very, very important for you. Your strategy now, for those that are looking for, are going for long-term investor, buy and hold. Focus on what? On solid, qualified or quality companies. Let me see, quality companies with what or stocks with strong earnings, and also diversify your portfolio at this time. And also, I will tell you the outlook remain cautiously bullish. I tell you that the view of deep or as a buy an opportunity for those that are long-term investors, but for those that are also short-term investors. When I say market player, who have this category of people in the market, we must not do it the way that because we have this problem, the smart investor traders here is also which are looking at the short-term price movement. Technical analysis become key. That means technical indicators and market momentum should guide you. That should be your focus for those that are short-term players or traders in the market. That means technical trading, profit taking, sector rotation, identify overbought and oversold condition is key, because it will help you also to navigate. Then I'll tell you that I'm neutral here now. A lot that I tell you, be wary of for pullback, and that pullback also is also part of risk that you can manage. Also, pullback comes for those that want to buy, for those that long term. Pullback is an opportunity for trader. Pullback is an opportunity, but what you use to gauge out your pullback is very, very key at this point. That means you must pay attention to factors that will guide you, whether you are a trader now or investor. I've told you your position. What is long term investor? I mean, I call the design investors should be looking at. and also what the smart traders, which are short-term players, also will also be looking at in this market. But in all, you must look at what is the improving data we are seeing as all eyes are looking at to see GDP figure even before the FPC meeting holds next week, 23rd and 24th. If you can see the GDP figure today, that will be nice. Now, that Monday morning, that is fine. It will help them also to know they have seen already, the inflation figure for the month of January, even though we saw a little decline, but it was part of easing after we rebased our inflation basket or database or whatever you want to call it. For me, it's a good news for the market. But right now, as we speak now, improving macroeconomic data, which is having a focus, is also very, very important for those that are long-term investors. And don't forget that the structural reform that government identifies also what is also pushing the market up, showing sign of stability. These are good things, and especially as all eyes are still on our exchange rate, which we are seeing many forecasts, many pronounced economists saying that yes, we are likely to see exchange rate coming as low as well as 1,200 and 1,100, 1,300, which are all good. We are still stability and below around this 1,400 for this 2026 so far. That for me is a good one for the economy, and which every investor or analyst or player want to see. Strong corporate earnings and valuation, which I would say is still very, very much there in the market. For me, it's a good one also to guide us as a trader or investors in this market. We must pay attention to that. Set up strategic opportunity. And here I see that for me, for those that are thinking long term and also for give them look the way of banking sector. We are seeing yes, even a rally and pullbacks. For me, for those that are look for value, or call them bargain hunters. I think banking stocks, some of them are still presenting for. I'll tell you, these are the sectors that we can see one single digit PE ratio in those sectors. For me, it's a good one. As we speak now, their P ratio is very low and one digit P ratio in that sector. Consumer goods, even when some of them are galloping in price, I still say some are still okay because of what the expanded market through the trading outside the South Nigeria, taking advantage of this Africa trade zone is a plus for them to see this will boost their number. I see it's a new phase. Even this some may experience some headwinds, but today that some of them are also coming back to profitability. That is a plus for them, and you can pay attention to some food and beverages and also consumer goods also there. Energy and telecom is also where you can also consider that yes, most of them will say that their P ratio is a bit relatively high, but see that the potential those companies carry is also good thing. These are the catalysts I see that also can further move the market up. It majorly as we are looking to see Dangote refinery, Dangote fertilizer, and also Airtel money. But all this also boost that sector. For me, investors also look that way. For those that are for also traders, yes, I would say that we can't ignore no technical warnings, but it's a sign. Especially when you see your relative strength index, that is also a key momentum indicator that is speaking above 70. For the broader market, and also for many blue chips, it send concern, and that's why the technical warning is there. But I will tell you, most times this technical warnings also help you to strategize. That's why I said it's not the time to focus on just running from the market. It's for you to be strategic and also know the position you are taking, pullbacks you are buying, because it's a sign. I tell you that yes, you must read in between the line. What is the market saying? Is there no price correction ahead? Yes, it's part of it, it's part of the market, and it's due. And also, when will it come? Yes, at the end you're expecting, because liquidity in the market is being fueled by what? The pension fund liquidity. How long will it be there? Is it maybe temporary or no? These are the things that I also be looking at. And also, don't forget that this pension effect is also what is driving the market now. And that's why I said, when too much money in the market, chasing few stock, prices are bound to go up. It's a simple problem. And also, I'll tell you that with the price we are seeing, dividend yields have compressed to a level that yes, they will not make meaning at all. Especially in an environment we are seeing also having this 27 MPR. Then that means any moment from now, any small thing can make fund living equity because of what the dividend yield that was part of attraction on the market is not there much again because prices have gone up. Unless we are going to see a new direction in terms of reward from market players, that will only change what the market direction. If not, and also don't forget also pre-election dynamics also part of what is happening in the market also, and this is the pre-election year. How we're going to play around the opportunities and the risk in the market is very, very important, because in pre-election year it comes with another type of spending, that injection of liquidity to the system how all this is going to support the market. That's why this year is a good year for many investors that understand. That's why this time we to go for knowledge investing, not just follow back wagon. You need to go for this kind of class. Make sure that also the paid one that come on Saturday, we also are having a guest speaker that's going to talk about risk management and the position of your portfolio for this work, for this period and for the year. For me, you need to go for such classes so that you can also know. Then don't forget to discuss, share it with what with analysts, with experts in the market. I tell you, many market analysts also can advise to be cautious at this time, but also you can heed to their advice because you are already seeing market at overbought region for the month. And how long will it sustain? Is there any pullback? Yes, if you are looking at other indicators, you also know exactly what to do. But I believe that it is time for us also not to be carried away by greed. Take profit and also bring your portfolio to a level that even though you are putting 70 to equity, 20 to fixed income, and 10% cash. Yet if you are taking profit, you are reducing your exposure in equity, but don't set down position now. And take profit because we are still seeing strength and market to still go up. Well, hold strong and quality components or stocks, and also be also in quality sectors that have strong fundamentals like the banking sector, the consumer. I can see the government on that sector, energy and ICT, like I said earlier. I can see pointer of growth in those sectors that also for traders, finally to wrap up this class because of our time, for traders, pay attention to what your partial profit taking is very, very important. Use your technical indicators, pay attention to your RSI and other momentum oscillators to help you, to time your entry and your exit. Very, very key. Rotate, from sector to sector, from stock to stock. Pay attention to them. Follow the money. That is why your money flow is very, very key at this point. Then manage risk and put your word overbought and oversold will also help you to manage. Also protect your capital and use your stop loss at any time to avoid also chasing momentum blindly. Avoid chasing momentum blindly. On this note, I'll say thank you. I'll see you on Saturday tomorrow by 12 noon by God grace tomorrow. Let's go back to say the market itself now. Yes, you can see here that market, you can see the trend here. This is a live market. You can see after market has started for those 2 days, you see a breakout and that trend is continuing. Pay attention to here that market also started at this point. And at this point, let me quickly call some indicators that help us to interpret this better. I know that my time is fast spent, but let's see quickly round up this here. Round up this thing here now. Yeah, this is the MACD, money flow, and our T line. Which anybody in this class, whether you are new, that we don't play with T line because that it gathers our support and resistance. Also used to get the market momentum and also weakness or strength. You can see here that market is still strong, trading above the T line. You can see here clearly that market is strong. Momentum is also good. You can see that MACD is also strong. And money flow that pull back, these few days that we saw this 2 days the kind of money move was profit taking pull back. But right now is up again above 70. As I said, this is a warning signal, but right now it's also above 70. But I tell you, when you see it, market remain all this while above 70 for future trend. As I said, it's not just a sign to just start panicking, but it's a sign that you also be aware of. Because after I see 100, it's stay here. But if you have jumped out at this level, when the market gets to this level, we are not there. But now that it's reversing, crossing 70 to 73, yeah, the market can still go as high also to 100 again. That means the momentum will continue. As we speak now, the volume in the market today is relatively low. You can see it from here, see that it's above, but it's just midday. But let's keep our factors to see what the market will do at the end of the day. For me, don't chase momentum blindly, but invest in value at this value. There are some stocks that have good value. Like I said, market have moved from before Nigeria around 7 something for market PR market price to earning. And speak now, market will to price it up at 10.12, 10.8. For me, still above 15, still below 15, sorry, and below 12. Say that our market is still cheap and attractive for more funds to come. On this note, I say thank you. See you tomorrow. Bye.